Guten Morgen. How is everyone today? Well, fresh? Good, fantastic. So I have 40 minutes to spend with you today. And in these 40 minutes, my main aim is to help shape your thinking around geopolitics and the emerging markets, which is a very, very interesting topic and something that affects everyone in this room today. And for me to be able to do this effectively, what I really need to do is to bring one primary message that you guys should really understand about this topic. And it's a message that, if incorporated to its fullest extent in your own portfolios, has the ability to really transform your businesses and produce alpha returns if you're not producing them already, and to increase them. In fact, if I were giving this talk to world leaders, this really has the potential to also transform entire economies. So it's very important, and it's something which deserves our full attention. And the main message that you guys should leave here with today, or the main statement of intent, is the following. The best investors ask the best questions. I don't think this is a rather peculiar or counterintuitive message. In fact, I think it's rather empowering also. Meaning, for you to be able to really understand the shifts and the developments in world affairs today, the best among us are the ones that really understand what kinds of questions we should ask about the world, to inquire across lines of inquiries that make sense to our portfolios. And this is rather hard to do, especially in an age where we have a lot of different risks around the world. We have a lot of things to pay attention to, and sometimes there's a lot of noise but not a lot of signals. So it's my aim and intention to make these points more clearer to you today. So if you think about it like sort of a pizza maker, right? He has the dough which he manipulates in his hand to increase the base of the pizza. Just like you guys, when you're looking to ask better questions, that improves your understanding holistically of the world that you operate in and new risks and opportunities that will emerge into the future. But naturally, the key point is, how do you go about asking better questions as investors? What are your models that you use to make sure your lines of inquiry are much more specific and tailored to your portfolios, so that not only you give your teams more confidence, but your stakeholders, your LPs, etc., much more confidence in your understanding and your abilities to face these long-term challenges. So that's my aim today. This will be done in three main points, or three main sections. The first thing I want to do is to help you understand how to apply first principles thinking on world affairs. The second thing I want to do is to really delve in deep for you guys to really truly understand the full extent of what geopolitics really means in the context of your investment portfolios. And thirdly, we'll be applying case studies, as Irina mentioned, throughout the talk. So that's what's really important. Now, to do this effectively, and I'll give you the secret up front if you want, the best way for you to ask better questions is to really start with having a macro question that all your team, be it the senior level to the interns to the analysts, coalesce around. A real statement of intent as to how do you approach world affairs. The way in which we do it at Pareto Economics, our macro question is, how is the world going to be changed and challenged over the next 100 years? I'll say that again. How will the world be changed and challenged over the next 100 years? Now, the reason we have this 100 years outlook is because really investors, governments, and corporations tend to have a much more shorter-term time cycle when making decisions. Right? Governments every 4 to 5 years, investors sometimes every quarter. If you're a day trader, it's every 8 hours you have to make a decision, right? So these things require much more longer-term thinking, because the risks that we face in the world today have a much more longer-term arc of impact. And secondly, with this kind of question, what you're also able to do is, this macro question is just the beginning, because any other derivative question that you guys are asking yourselves in your own teams is just a derivative of that main question. So the questions that Irina asked, does, for example, gold and silver make up your portfolios? What do you think about the future? How will you approach, Trump's tariffs, etc.? It's just a derivative of that main question. So that's the best place to start when making your strategies applicable in the world. So how do you do this? First principles is a concept, as you guys probably well know, used in physics, but applying it to world affairs could be very, very powerful. So powerful in helping you understand the full extent as to how world affairs works. And the way we start this is by making 3 to 4 main points or assumptions about the world that we start from. as a starting point when making our forecasts for the future, for the investment classes and for corporations, etc. So what we do is this. We say, for example, number one, that the nation state or the country is the primary driver of world affairs. Nothing else impacts the world more than policy. And this can be proven. Typically, wars happen between countries. And if it isn't between countries, it's between non-state actors and countries. But typically, non-state actors want to impact government policy, which is why they act. Tariffs are placed by countries at the borders of their countries. People are citizens of countries. So all activity in the world needs to be looked at through a country lens. International organizations, World Bank, IMF, UN, are created by countries to serve countries. So when you're looking at these trends, you have to look at what are country leaders doing in response to the world and how do they affect the world. So that's number one. Number two is asking ourselves, what do countries want? What's their modus operandi? What's their MO? And in our assumption, what countries essentially want is power. I think that's a non-disputable point. But then the third point is, how do you define power in this context? What is power in relation to a country's development? Now, this question has been asked by many military strategists and philosophers throughout time, but none of them have really made a point to make it bespoke to the investment classes, which is what we're here to discuss today. And in our assertion, power is essentially the ability of a country to secure their own interests. So it's the ability of a country to secure their own interests. Now, this isn't a binary expression, meaning it's not either they can or they can't, but it's more on the continuum. So some countries are more able and some countries are less able to secure their own interests. So the next point after that, if you think logically, is what does a country have at their disposal that they can use to secure their own interests? And how do investors then see the trends in these factors so they can, again, be ahead of the curve, so they can see these things coming before they hit? Because that's how you find your strategic gains. And if you can do this effectively, you're winning in the long term. So this is the main important question that we ask. How does a country secure their own interests? And from our extensive study and analysis, we've developed something called the Centers of Power model, which really explain what countries have at their disposal that they can use to do this. And this can be applied to any country in the world, to Gambia, to France, to Germany, to China, to Albania, to Italy, right? To Venezuela, North Korea, in fact, everywhere. Because each country has at their disposal what we call 6 centers of power. Their active consumer markets, their military balance, their technological leadership, their geostrategic positioning, their systemically important commodities, and their financial strength. These 6 coalescing together allow countries to either focus their attention in one area, or if they're strong in all of them, really dominate the conversation and dominate the attention of investors. Which is why we see America really leading in the world, not because they're somehow more special, because they speak a fancier version of English or they make American movies, but because they have dominated across time since after the Cold War in these 6 dominant areas. And each other country that we look at can be compared on these 6 to see where are they in their development arc, what they need to do to improve, and where do they falter and where should we avoid investment, and focus our attentions. And then what we've done is that we've combined these 6 to create the Global Power Index, which essentially is an ability to see holistically where countries rank in the world of power relations. And what I have to show to you today is what this ranking looks like in 2023, how the world sizes up, and what does the landscape of power look like. Would you like to see it? Are you interested? Have you got any predictions who's first, second, or third before I go? Because this is always very interesting. Any idea who's probably maybe first, 3, 4 are maybe obvious, but any assumptions that you guys can throw out? Who do you think is number 1, 2, and 3? Would we say America would be number 1? You think so? Yeah. Number 2, China, Russia? How about number 5? See, the top 3 are always really easy because it captures your attention, but when you look downstream, it's really hard, I think. Singapore? Where is Singapore? In terms of the Global Power Index, not across the others, because the other 6 make up the GPI. Shall we see? Now, what I really shouldn't be doing is showing you guys the scores, because that's typically behind a paywall, but anything for our friends at CityWire, of course. So this is the top 10. And what's interesting to see is the scores and what we call the power differential between countries. So look at how much ahead is the United States to China, to India, to Russia, and all the way down. Shall we give you some more? Would you like to see some more countries? Yeah? Let's see the top 20. Who do you think is 21? Who's 21? What country is 21? If you can guess, you're number one. Who's number 21 from your assessments? Just shout out. Mexico? Mexico is already 15. Norway? Switzerland? Who said Switzerland? Hands up. Who said Switzerland? You're right, Switzerland. 21. There you go. I don't have the data here, but Switzerland's number 21. Can we change the screen so I can see what the next slide is? Now, I said I'll be talking about BRICS, right, and the G7. What can you notice about the top 12 countries? If you look at it intently, there seems to be a very clear divide between the top 12 countries. And if you can't see it, let me show you. No, we have, again, a split between the G7 countries and the BRICS countries, really dominating the top 12, apart from South Korea, top 12 countries, right? And this, again, hasn't always been the case, but across time, we've seen these trends and developments over time. And this is what we're placed with, to see how the world develops. We're seeing how the conversations are really led by these two major blocks, these two major power sources. And over time, the conversation, I believe, will be dominated by these two blocks, but for different reasons. And we'll talk more about the BRICS countries in the next part, but I just wanted to give you a basis of where we start from and how you guys can start making your teams much more aware of these issues and these trends across time. Now, I said we'll be talking about geopolitics too. Now, geopolitics has a few points to mention. Now, from the time of, if anyone knows here, Halford Mackinder in 1904, who really pioneered the concept of geopolitics, he really discussed geopolitics through the lens of geography and politics, which is what geopolitics is. Talk about the heartland and talk about how geographic realities shape the world. But as time has passed and as these 6 centers of power have coalesced and emerged more important, we kept adding extra dimensions to geopolitics when talking about world affairs. So no longer is it geopolitics, but it's geo-economic, technological, and socio-political risk, right? So it's much more encompassing to really take into account the depth of risks and opportunities we have in this world today. So when we talk about geopolitics, we're not only talking about the geographic realities, but again, with that, I think for many investors, geopolitics is really just, the salt on top of the dish, as opposed to really understanding the meat and bones of it. We have an approach that we use, which will give you a much more comprehensive look at the full depth of geopolitics that I want to share with you also. We call it the geopolitical risk matrix. The first aspect of the geopolitical risk matrix to understand is that geopolitics, in fact, has different speeds, believe it or not. We have some risks and some opportunities which are fast-moving and slower-moving in the world. So that's one dimension on the x-axis. We also have some risks and some activity which are global in nature and some are bilateral in nature too. So if you take the most important things happening in your world today, we can plot them like this. So in this case, we have an understanding that for geopolitical risk, which is instigated by countries, the intended target is different to the unintended impact, perhaps. So when we're looking at oil prices typically are manipulated by countries to suit their own agendas, but the impact is very global. And they are quite fast-moving, so that's why they're placed there. Tariffs, for example, like we see for Trump, that he claims he will put on the world, again, are fast-moving because it doesn't take much effort to put them on, and they're bilateral in nature. But the impact, again, for this, in terms of the secondary impacts, are very global. Same thing for sanctions in different cases. We see sanctions upon Russia, which are very bilateral in nature, again, put on by a number of parties, but global in their impact. Wars, same thing. Trade deals, the same thing also, although they are much more slow-moving in terms of their speeds. And if you notice in the middle, there's nothing really that is neither global nor bilateral or fast or slow. In the middle, there's nothing really that does it, but they all live around the periphery. But the most important aspect of geopolitics that no one really thinks about, it's not really in the news or doesn't take up space in their thinking, is global governance. Again, going back to the BRICS and the G7. This is the granddaddy of geopolitical risk because it's the most slow-moving thing, but it has the biggest impact on the world. So think of it like a frog put into cold water. Over time, it heats up and it becomes cooked, essentially. So we saw with the rise of BRICS, when BRICS was created, by Jim O'Neill, in fact, the Goldman Sachs leader. I think he was the chief investment officer back then. He wrote a paper on BRICS, and it became a concept, right? So it wasn't a creation by the BRICS themselves, but it was a Western creation to talk about something interesting in the world. And that then took hold over the next. It began in 2001 when China joined the WTO, and over time, it's taken the shape it's taken today. But although BRICS is talked about, its impact on the world is seen in different senses, but not as much as I believe the G7 or what the G20 should be, which is a place to debate and to discuss issues on a global level. BRICS really isn't BRICS. BRICS is more like China plus than BRICS plus, because the undisputed leader of BRICS is China, and all other countries coalesce around this emerging market leader to really have their needs met and to have their agendas set by this much more dominant power in the world. But the optics look different. So that's how the world and how geopolitics really should be understood. It's not something that happens today and ends tomorrow. There's different speeds of impact that some people pay attention to more because it's in the news more, but some things move much more slower. Some things are more bilateral, some things are much more global. Now, let's take a big focus on India, because India, to me, and perhaps to you as well, seems as if it's the giant that doesn't get talked about as much. Although they joined the WTO before China did, in 1995 compared to 2001, they now have a bigger population than China. They seem to not have grown as fast as the other countries, especially China in comparison. So if you take a breakdown of how India looks across the 6 sub-indices that we've ranked China for 2023, this is essentially the model of China here. So we have the ranking, sort of where they rank in terms of the sub-indices, and how that looks like on the screen too. So its biggest, it leads, for example, in the active consumer markets and in the systemically important commodities, but it really lags behind in financial strength, although it is close to the top 10. But as you saw in the next slide, the differences between number 1 and number 2 and number 12 and number 11 are stark. So we can't just look at where they rank, but how far or how ahead or how behind are they with other countries. So let's do an exercise. Let's compare India to China to see what the world looks like for these partners, because it's super important to see this in action. So this is, again, a graph that deserves our full attention, and we'll spend some time looking at this properly. I'll explain what we see. So on the right-hand side, we see the hexagram, again, of how China and India compare, again, from the ranking. So 12 or 11 is the lowest ranking, and 1 is the highest ranking. So China, across all measures, outranks India across every single measure. So although it has a bigger population, although it's a democracy, although they speak English, many factors which make one think it should be ahead in the lead, these haven't seemed to work in its favor. This can also be seen then by the rankings if you want to see it more clearly. On the top, the ranking again shows the same thing as the hexagram. So the longer the bar, the weaker you are, essentially, is what the message is here. So there's stark differences. So financial strength, China is, for example, number 2. And India is number 11. If you look at systemically important commodities, not much there. Again, they're the top 2. Geostrategic position, again, China ranks number 2, and India ranks number 9, and so on and so forth. But the differences between number 1 and number 2, for example, if we look at the systemically important commodities, is vast. If you see here, for example, India has a score of 42, roughly, compared to a score of 100, right? So that difference means billions and billions of dollars. That difference is the attention placed on countries. That difference is the confidence that investors have about these countries moving forward. And the only people and the only group that can really change these perceptions are the nation leaders of these countries. And I think one of the main reasons as to why India hasn't developed as fast as China is, when China joined the World Trade Organization, there was a big push by the Americans to say, if we give China opportunities to develop, then their perspective on their political model will change. So they really heavily invested into China because they saw great opportunities and they saw an ability to again conquer communism and to flip that country into a democratic model. Whereas India didn't really have these worries by the Americans and by the West. So perhaps the attention they placed and the development models they placed upon India weren't as pertinent. Also given the fact that with China, they have a one-party system throughout all levels of government. And having a one-party system allows focus and allows not a lot of debate to happen as to what we should do. It lowers bureaucracy, and they can really have the opportunity to spend their time focusing on a vision plan of their country, which makes sense to them and which sees them become a leader. So their intentions of development are very important. Whereas India, it costs a lot of money to hold elections. Their development models are much more internal. They haven't made a point to really give a perspective in terms of foreign policy which is divergent from any one major. They have disputes again with the Americans and Europe when it comes time to buying Russian oil, for example, but they don't have a staunchly different perspective on development, on other countries' affairs, or how other countries should act, and they don't have that weight to apply to their opinions in the international sphere. They're the biggest democracy in the world, which again hasn't had the ability to really focus because their fundamentals, in my opinion, haven't been developed as strongly, which we can see from the data. I don't have it in front of me now, but if you were to see a long-term perspective of these countries into the future, then you would be able to see how they've changed and developed over time. So for India, BRICS really isn't an avenue for dominance because in their mind, they don't have this view of the world of themselves as being a dominant power for the sake of it, but they have a different perspective of how they develop. And BRICS, again, is an avenue, but not everyone agrees as to the direction of that. You know, they have this new BRICS currency, which India isn't really in favor of because they don't want to undermine the rupee. And Russia really wants to use BRICS as a conduit to showcase how disgruntled the emerging markets are with the West. And China really is engaged in all kinds of platforms because it wants to keep its weight across all platforms. So they put more money into the UN institutions. They put money into the Shanghai Cooperation Organization. They put money and influence into BRICS and other international bodies just so they can have their ear to the ground in these parts of the world. But they're very unipolar in terms of their development. If they can use other countries for their own sake, they will. But they will not make a point to join or to be part of any one bloc because they realize the importance of engagement. But the issue we face in today's world, ladies and gentlemen, is that because countries across time are growing in their power in general, institutions like the G20, like the UN, become even more important because that's the forum that they need to use to debate and discuss issues and to come to agreements. But if we have a political leader or a political philosophy which is so divergent to the dominant philosophy like we see with China to the West, then we will see schisms in these relations, and this is why these institutions are even more important. And there's no reason why we can't see in the foreseeable future why alternatives to the UN or versions of that can be created by China and others if their voice isn't heard as much or if they can't get what they want, essentially, you know? And this is a continual battle for ideas and influence in these models and in these channels. And India plays this position in this, but they haven't got a real, in my opinion, concrete long-term vision plan as to how they see themselves in the world for them to attract more attention from investors. And also when it comes time to India, the biggest opportunities for India are in industrial manufacturing, meaning they need more industry, more infrastructure to develop their lowest performing citizens, right? The poorest of them, which again go into the multi-millions, more than the majority of most populations. So if they're not productive, they're a drag on resources. And this drag on resources doesn't stop. This continues into the next generation, costing them money. And this is why I think there's a bigger drag on India than there is on China. And again, investors see this and they think, if this is the case, then I'll stick to what I know. And especially if the Western markets are outperforming, let's not spend our time and attention focusing on these parts of the world. Let's compare it to America as well. This is where the differences become less stark, in fact, not more stark, because we're talking about the top 4 countries in the world. And in this case, India and China outrank the United States in some measures too. Again, this is only for 2023. If I were to show you data going back to 1994, which we have across all these countries, then you'll be able to see the dance of power across time for these countries, which is very important. I'll give you a second just to take note and take a look at that. So what do we see? What things stand out for you? Well, number one, as we can see, the United States isn't the dominant leader in all of these metrics, although in general they are. But let's break it down. Financial strength, again, India lags behind greatly compared to the other two. But for financial strength, again, there's only one space difference, right? The United States, number one, China, number two, India, number 11. But the differences between number one, number two, number 11, again, are stark. Look at the differences here. Again, the more countries we add, the more you can see the differences, right? And this is a result of government policy over time. Their time and attention and focus for the long run over time, right? You can argue that non-democracies have, by their nature, more confidence in the long term because they don't have to deal with elections, right? But again, the United States again is perhaps counter to that because they do have elections, but their growth has been, unstoppable since the time of the Cold War. And now they are challenged not because the United States are somehow losing power, but other countries are gaining strength across time, which is why we see these differences, right? Power isn't a zero sum; it's not finite. It keeps growing, right? It keeps growing, right? Just like the federal deficit, it keeps growing. So this is what we have in the world today. Across all these measures too, we can see these things emerge and we can see these things impact the world very, very much. Let's move on to, let's say, the geostrategic positioning index 2. Again, India, very much number 9, 1 and 2 for the United States and China. Active consumer market, less so. What do we see here? We see, I believe, India ranking number 2, China number 1, right? China number 1 for consumer markets, and US number 3. So again, in the top 3, right? Again, you may say the United States has a trade deficit, which inspires consumption by their populace, which has a lot of negative consequences on their demographics, right? High private debt, which caused the bubble in 2008, right? But as a market for exporters, it's been the number 1 market for a long time, which is why the dollar has been so important. And these other countries can't catch up as fast because the United States has been responsible for creating the model of development. They created the institutions and the perspectives on growth and trade, which benefit them, right? When it was GATT to the WTO, it benefited really the Americans for a long period of time. Which is why the emerging markets were so disgruntled by this, because they were only losing out in this model. But with the rise of China, maybe we'll see a different alternative to that for emerging markets to take advantage of. But the only issue I have with that is that as China slows down, and as the Americans under Trump will have less engagement with the emerging markets, especially when it comes time to things like energy infrastructure and foreign aid, I believe, where do the emerging markets go for liquidity? Where do they go to build their economies? And what do they do? And also, emerging markets aren't one thing, of course. They're a spectrum of different countries with different timelines and different development metrics. So you can't just see them as just one holistic block. It's impossible because they're so divergent. So what do they need to do to emerge and what do they need to do to grow? One thing. And one thing, it sounds easy, but it's very difficult. And that is having a leadership which thinks long term and has a development plan which makes sense to themselves and also to the investment classes. Because there's 2 things which are needed to develop a country. And that's attention and that's trust in that country to actually deliver what they say they're going to deliver over time. If they don't have this, then we will see stagnation. If the leadership in these countries and others don't have this, then why should you in this room pay attention to them? Your money could be spent elsewhere, see higher returns, and you don't need to do it, right? Which is why we see a funding gap, I believe, in these parts of the world, right? Anti-money laundering regulations, again, are less prevalent or less structured. Regulation is less in these parts of the world, which again is why we see an energy funding gap, a trade finance funding gap, and a general funding gap for the emerging markets. And it's going to be very hard for them to find partners, I think, into the future, because the 2 biggest partners that they've relied on historically, for better or for worse, and now are turning inwards. So where do they go? They can work amongst each other. They can go to the Middle East. They can go to the GCC countries and form alliances, but that's going to take a long time. The GCC countries don't have the experience of dealing, I think, with these partners over the long run like the others did. They may bring some benefits to them too, but it's still yet to be seen who do the emerging markets work with, who do they partner with, who do they do knowledge sharing with, right? Who do they ask liquidity from, right? Because they can't rely on their own currencies, right? Their industries are mostly based on the first layer of service on the production chain. Moving up the production chain is going to be very difficult, especially for their sizes. So that's India, China, and the USA. I said I'll discuss Mexico and the US. I think the US is on the lips and on the minds of many people, especially as Trump comes into office. His post on Twitter and his general assertion of what he wants to do has captured the attention of this room, I think, 100%. And as he comes into office, we will see a lot of things that, again, will benefit the United States, could also benefit you in this room if you decide to put more weight or lean in more to the United States. But if that means leaning into the United States, there's only so much liquidity you have, so that means probably leaning out or coming out of emerging markets, which again, we'll see repercussions. But let's look at Mexico. For Mexico, I'm going to dive into 3 main points for Mexico. Okay, there's a lot to talk about, but I think you can distill them in these 3 different ways. Number 1, we'll be looking at demographics and demographic challenges, especially as Trump comes into office, and what this means for unemployment. We'll also be looking at innovation as a source of progress, and we'll also be looking at sort of, is the made in Mexico manufacturing boom that we see threatened by the next phase of geopolitics that we'll see in the world today. Again, we're not talking about global governance, we're talking more closer to the fast end, right, and closer to the bilateral end in the last thing that we saw today. So, we have a new leader in Mexico, right? Claudia Sheinbaum. She is different in terms of her CV and her background. She comes into politics not as a long-term standing politician, but she comes into politics as a scientist, as a physicist, and also as a Nobel Prize laureate from her activities at the UN in 2007. So she comes with expertise, she's a technocrat, some may say, and her intentions are to use her knowledge and experience to hopefully transform the future of Mexico. She has a lot of headwinds coming her way, naturally. She hasn't been tested too much in terms of international politics. She was the mayor of Mexico City, but that's more of a domestic role in politics. She has been trained by her predecessor, AMLO, right? Andres Manuel Obrador. But her tests and her struggles are just going to begin now, especially as the United States president comes into office. So let's start with something which I think is staring us right in the face, especially if you're looking at emerging markets. Mexico is a big, big bet because of their proximity to the United States, and that's how they've developed over time. But this is something which is in your face to see, but I think deserves our attention. What we have seen over time is that unemployment in Mexico has reduced, right? Has reduced over time, which is a good thing, right? But at the same time, Trump coming into office, he has promised a mass deportation exercise of illegal migrants. Now we can see over time, Mexico makes up the largest portion of illegal migration into the United States. That has reduced somewhat over time, and countries like Venezuela and others have increased, but it still stands at close to 5 million people, right, illegally, that are counted from Mexico in the United States. Let's take it conservatively. Let's say, for example, the American president manages to deport half of these people. So that's 2.5 million, let's say, over the next 4 years, right? And let's say out of those 2.5 million, coming back to the reason why they left Mexico is because of employment opportunities and other factors. They're going to come back in, and let's be generous and say half of those people will be unemployed when they come into Mexico. So what we're facing in Mexico over the next 4 years is a doubling of the unemployment rate. If we're looking at just the migration flows of Mexicans, expatriates back into Mexico. Yeah? Doubling of the unemployment rate over the next 4 years, right? These are just broad stroke ideas based on the data, not based on my assertion, but based on what we see. So that will face a lot of drag on their national resources and even more pressure for Claudia Sheinbaum to deliver in terms of economic growth policies, right? So that's what we have to see. That's number 1. Also dealing with the cartels and dealing with a lot of domestic issues that she has to face, you know? In fact, when she ran for office, I think there was 37 presidential assassinations, right? Or people who wanted to become president in this round were assassinated. So it's a very dangerous job as it is, number 1. Right, so now that she's managed to survive and actually become president, she has to really deliver on these things, because even if she stays where she is, there will still be a big influx of Mexicans into the country. So what does she do with this excess population, I suppose you'd say? This is very key. I don't have the answers that she should have the answers to this, and we hopefully will see this. There's 2 ways in which I think she can see growth, potentially, right? We'll see what her policies do. Number 1 is through energy, right? She can increase R&D and she can increase employment through the energy sector. But then again, this is a very specialized sector. And those who've been unemployed may not be able to transition into the energy world as easy. So education, R&D, investment into the sector is key. Now, again, she, as a climate scientist, she understands the issues of global warming, and she understands the need to transition away from oil and gas into renewables. Although I believe the energy transition is not exactly a transition, and the wording is very wrong, which causes a lot of capital expenditure to go down the drain. But this is what we see, right? So the total energy supply in Mexico is predominantly oil and natural gas. That means the amount of energy that they produce that come into the country itself. And over time, the amount of oil has decreased, but the amount of natural gas has increased. All other renewables have never moved. They've been dead in the water. They haven't moved at all over the last 24 years, guys, okay? So all this attention of renewables, especially in emerging markets, we can see factually has not reached them, right? Investment has not gone there. Projects have not emerged there. So that's a big, big key thing. So she needs to really deal with this. If we're looking also at their domestic energy production, they produce a lot of coal. They produce a lot of natural gas. And in terms of the renewables, negligible, right? So if she's looking to transition, which again I think is a misnomer, out of oil and gas, what are the alternatives for Mexico? What infrastructure have they got? Again, for them to be successful in this, they really need to do two things, as I mentioned. They need to have the attention on them, and they need to build trust in their vision and their plans for the long term. If they can't do that, this will remain as it is. And her expertise will not be lived to the fullest extent. And this, again, will put a lot more doubt in the minds of investors as to the need, the viability of renewables in this sector. So if you guys are looking into the renewables world, if you're looking into energy, we need to look at what she plans to do as one of the biggest countries in the emerging markets in this sector. That's key. And also, we can see they used to be net exporters, now they're net importers. So across time, their energy infrastructure and the income from the government income from these things has depleted because they've reversed their trends. Again, so they're not in a good position when it comes time to energy at all, I believe, especially if their plan is to transition and to be a much more renewable country. She has the expertise, but does she have the ability to transform infrastructure over a 6-year tenure? We will see. We will see. But again, with the United States, putting pressure in all kinds of different ways, tariffs, etc., it's going to be very, very difficult. And she has to pick her battles very cleverly and carefully and go all in on a few points for her to be successful. And finally, Made in Mexico, is it unwinding? Now, Made in Mexico isn't a new phenomenon, right? We saw a lot of US producers move to Mexico early on. In the 80s, a lot of Asia-Pacific countries, right? The emerging, the rising tigers, South Korea, Japan, etc., opening up factories in Mexico to serve the American markets, which has seen a big boom, naturally. And now, because of the tariffs Trump placed on China, they moved their production to Mexico. But then again, this is a good thing, but it's not a secure path to growth because they're relying on their biggest trade partner for their development. They haven't developed internal mechanisms to boost internal growth and to boost GDP by servicing their own people. That's the hardest thing to do when you're looking to nation build. The easiest thing is to produce cheaply and export. But when we have these top-down risks coming from your biggest trading partner, it's going to be very difficult for you to now change your economic model and say, our aim is domestic demand increase. So for us to do that, we need to increase employment. But to do that, we need to be able to increase the productivity of our people and have industries that they grow into. If your industry is manufacturing for an export market, and if that gets closed down or curtailed, that's not only going to impact your company's bottom line, but that's also going to impact the investment perceptions of investors, which is not a good thing. Okay? So to end, we've talked a lot. Let's end on 3 important points. The learnings that we've hopefully taken today is that when assessing world affairs, always start from first principles. Always ask yourself, what do we know about the world factually, and how can we build from there? Number 2, when looking at the emerging markets, right? Not all emerging markets are the same. They come in all different colors and shapes and sizes. So don't rely on news media for you to build your opinions, but really dive deeply into what they're doing and what makes them different. In our case, we use the Global Power Index to do this, where we can see 194 countries. You guys can use this as well, or have your own models to do it. And thirdly, which is super important, which really will dictate your success as investors, is not only the quantitative data, but what is the qualitative telling you? right? What are the intentions and visions of the emerging markets and also established markets for how they see their economies growing? Do you buy into it? Do you trust it? And do you think it's a viable path for their domestic growth and their development? If you do, engage. If you don't engage because everyone else is doing it, right? Have a real opinion on this based on first principles and based off of hopefully what you gained here with me today. Thank you so much.